What's going on YouTube? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today I'm going to teach you how to short for accumulation. How can you stack your favorite coin by shorting the market? Stay tuned. I'm going to show you how. Alright everybody, look, it's not financial advice and I'm not a financial advisor. I'm not even going to be looking at a chart. There's not going to be technical analysis on this video, but just a method for using the mechanics of shorting to accumulate as opposed to shorting and taking profit. So what I'm going to do is I'm going to show you first exactly what it means to short. What is a short? That is when you're on an exchange, primarily an exchange that gives you leverage so that you're borrowing money from the exchange. They are going to sell on your behalf. Say you have coin X and they are $1 a piece and you want to sell $1,000 worth. There will be 1,000 coins sold from the exchange and they give you $1,000 and they say, hey, whatever the price is by X amount of time, you owe us 1,000 coins, whether it's $1.25 per coin or 75 cents per coin or $1. It doesn't matter. You owe us 1,000 coins because that is what we sold in your name. So that's how shorting works. You make your money by buying it back at a lower price, giving the exchange the 1,000 coins back, but you bought them at $750 and you keep the $250 in profit. That is how shorting works. But what I'm going to show you now is how to short for accumulation as opposed to shorting for profit. So we're going to do some daily grind shorting for accumulation math. So if you market sell coin X for $1,000 at $1 per coin average, you now owe the exchange 1,000 of coin X. What you would want to do is put a stop market buy order in at your targeted price. Target price triggers at 75 cents per coin for a total of $1,000. Now remember, you got $1,000 from the exchange and exchanged for 1,000 coins. Now your buy order at 75 cents with a total of $1,000 generated 1,333.33 of coin X, leaving you with 333.33 coins of accumulation to move into your main account off of your leverage account. The initial 1,000 gets paid back to the exchange. The money is at break even. There's $1,000 in, $1,000 out. The money stays break even. You have 333 additional coins to move into your main account, and you can rinse and repeat as long as you know how to do the technical analysis to be able to say, hey, I believe we're going to have a 10% move here, or this price is going to break down. We're touching this trend line. It's going to reject. However you see fit to do your technical analysis, however you would make your decision to short the market. If you win, you can do it without taking the cash and you can actually take the accumulation. What this can help with people who are more looking to get into a long-term holding position. Say your favorite coin is FTM and you want to accumulate as much FTM as possible, but you don't want the dollar cost average down. You don't want to buy at $1.75 or $1, or you don't want to buy at $2.50, $2.15, $2.03, $1.90, $1.75. You don't want to DC all the way down. But what you can do is you can take those support resistance lines and say, it hit this resistance, it failed to break this resistance, I will short from this one to the next support. And whenever you accumulate there, you put into your primary account. And then that support breaks, it gets a retest, turns into a resistance. Now you have a SR flip and you know what your next level of support is. Now you can short from that resistance down to the next support line, and whatever you accumulate on that, you put into your main account. Now you're accumulating coins by trading without losing any money. You're not actually just adding more and more and more money into this as you're buying. You think you buy the bottom, and then you think you buy the bottom, and then you think you buy the bottom, and then you think you buy the bottom, into your DCAing down to a 97% FTM. I'm not saying it's going to get that low, but just for reference, like you can DCA all the way down, or you can short for accumulation. And then once you get to the bottom and the pattern breaks and the trend line breaks and the market goes bullish again, you can take whatever cash you have available, whatever it is that you want to do, buy as much of that as you want, but you've already accumulated potentially hundreds or thousands of these coins just by trading down, just by shorting for accumulation, in which case now you have a long-term hold position for FTM where your average cost is next to zero because you've just been trading it and keeping your trading profits. You're playing with house money and you're just keeping the profits as coins. And if you have 5,000 FTM and then you buy when you believe it's at the bottom when the trend reverses and it's 90 cents per coin, you put another 5,000 in there, you could potentially go 400, 500, 700% up off of that hold, off of these short position trades. So that's the video for today. That's one reason for trading that I don't think gets explored very often. I don't believe that this gets explored as a potential for shorting the market for accumulation as opposed to shorting for profit. So if you like this video, if you found it helpful, please like, subscribe, share this with friends. And as always, guys, until next time, peace.